Right now, as we speak, investors are pricing an initial public offering that dwarfs every single traditional market record. For 6 years, Saudi Aramco held the record for the largest raise in history at $29.4 billion. That valuation was the result of 80 years of production and $20 trillion in proven physical oil reserves. SpaceX is currently on track to raise $75 billion in a single morning. This comparison reveals the central anomaly of the deal. While Aramco is anchored by $20 trillion of assets, SpaceX is seeking a $2 trillion valuation despite an annual operating loss of $5 billion. This suggests the market has moved past traditional balance sheet evaluation, entering a high-stakes bet that contradicts the established rules of aerospace economics. There is a common misconception that SpaceX equity is a direct play on Mars colonization, or the romanticism of space exploration. Looking at the internal structure, the company is actually 3 separate businesses operating as a single unit: a rocket division, the Starlink satellite network, and the AI firm xAI. Currently, the rocket division operates as a loss leader, consuming billions in capital to iterate on experimental hardware. The long-term enterprise value is actually being generated by Starlink and the integration of xAI. This structure suggests SpaceX is positioning itself as a megastructure play, a gamble that the future of heavy compute will bypass Earth's utilities and move into orbit. The Starship R&D program currently creates a $3 billion annual drain on the company's cash reserves. To maintain solvency, the system relies on the cash flow from the Starlink satellite network. Compare Starlink's profitability against the tech world's primary profit engine. AWS operates at a 50% margin, but Starlink achieves a 63% margin. These orbital profits are injected directly into 2 primary burn units: the Starship program and xAI's $6.4 billion deficit. Starlink functions as an internal venture capital fund. The $2 trillion valuation relies entirely on this terrestrial telecom monopoly to stay afloat. In 2010, the world generated 2 zettabytes of data. By 2026, that volume is projected to reach 221 zettabytes. On Earth, processing this volume of data requires a massive expansion of physical infrastructure, warehouses filled with servers that run 24 hours a day. This graph maps the physical resource strain. Local electricity prices near data centers have risen up to 40%, with single AI facilities consuming power equal to 100,000 households. Cooling them requires 9,000 gallons of water daily per megawatt, competing directly with community drinking supplies. Moving these data centers to space offers a physical escape. Outside the atmosphere, solar panels are 40% more effective, providing a constant power supply that doesn't drain the local grid. AI scaling has moved from a software challenge to a thermodynamic one. Space has become the only geography with the resource capacity to sustain the next decade of growth. There is a common assumption that the cold of space makes it an ideal environment for cooling high-performance computers. Physics says the opposite. This cross-section shows the challenge of a vacuum. Without air or water molecules to conduct heat away from the chips, the vacuum of space acts as a perfect insulator. Any heat generated by a server is trapped inside, much like a thermos. The only way to dump heat in a vacuum is to use massive physical radiators that release thermal energy as radiation. To manage just 70 kilowatts of heat, the International Space Station requires a radiator system weighing 7 metric tons. Attempting to build an AI data center in orbit immediately creates a mass crisis. Solving the power problem creates a weight problem that current rockets cannot afford to carry. Scaling the ISS math to commercial standards reveals the penalty. A 10-ton orbital computer requires 100 tons of radiator mass just to keep from melting. At current rates, launching a kilogram of payload on a Falcon 9 costs approximately $2,700. At $2,700 a kilo, a 1-megawatt space data center costs $300 million just to launch. Compared to Earth-based construction, the project is economically dead on arrival. Starship's goal of full, rapid reusability is the engineering solution to this specific financial bottleneck. If Starship successfully drops the launch cost to $200 per kilogram, the price to deploy that same megawatt falls to $22 million. That shift brings orbital cloud computing into direct economic parity with data centers on Earth. $200 per kilogram is the most important metric in modern finance. It is the exact tipping point where the space economy becomes a viable reality. SpaceX claims a total addressable market of $28 trillion, but investors should note that this figure is built entirely on technology that is currently in development. This chart compares the revenue multiples of the leading AI players. While Anthropic trades at 13 times revenue and OpenAI at 35, xAI is being valued at 78 times revenue, a premium that significantly inflates the SpaceX valuation. Furthermore, competitors like Amazon's Project Kuiper are preparing to launch rival constellations, which threatens to drive down the margins that Starlink currently uses to fund the rest of the company. This entire financial ecosystem is highly fragile. Any delay in Starship's cost targets or any compression of Starlink's profits would immediately threaten the solvencies of the entire $2 trillion structure. The IPO structure includes an unusually high retail allocation, with 20% of shares going to individual investors, roughly 3 to 6 times the standard rate. This allocation can be interpreted in two ways. It is either an effort to democratize the upside of a generational technology, or a strategy to find exit liquidity for institutional investors at the peak of a cycle. The viability of this investment depends on 3 specific numbers: the $200 launch threshold, a 63. This IPO represents a major shift in focus. Earth's electricity and water grids are reaching their physical limits, and the infrastructure for the next economy is moving to the only geography left to expand. Deciding whether SpaceX is the next Amazon or the largest bubble in history depends on whether this $2 trillion machine can actually hit its engineering targets. Everything comes down to that single number: $200 a kilogram.